Did you know about the Himalayan Happiness Index? Hello, Market Club members everywhere. Adam Hewison here, co-founder of Market Club, with your midday report for Monday, the 6th of August. Okay, now we have Chairman Ben Bernanke, yes, the very same helicopter man, quoting the Himalayan Happiness Index. Is it just me, or does this sound crazy to anybody else? If that was not enough, Italian PM Monti, that's Prime Minister Monti of Italy, basically, he was quoted in Der Spiegel, which is a German magazine, this weekend, saying the Eurozone is facing psychological dissolution. What the heck does that mean? You know, I have to give Monti and Bernanke credit. That is the first time I've heard a Fed chairman citing the Himalayan kingdom of Bhutan gross national happiness index and a politician using psychological dissolution in a sentence or anywhere else for that matter. And no matter what they say, the second half of the year will provide a silver lining for traders everywhere. Some great opportunities there. So let's go take a look at the markets and see what's going on. First of all, if you're a Market Club member, I want to show you some of the additions we have here now. And this is happening to, in your portfolio or anywhere else you look, basically you'll see these little yellow triangles. These are brand new. And what they mean is these are signals that just came in today. Green weekly, you see it's 1795. That's today's date. You can't see it just off the screen, but it'll give you an idea of this is exactly what happens. You just mouse over and you see there it's today's date. But these are all happening. It's in the trade triangles, and also if we scroll down here, you'll see it's also in your own portfolio with the highs, anything that's coming in there that's a signal today. It's very, very welcome addition to Market Club. I think you're going to love it. So let's go to the markets and what we're doing right now with the trades, and we'll go right to our portfolio manager, and we're looking at the S&P 500, which is again reaping the benefits from Friday's massive move of almost 2%. And once again, we're at the top of the Donchian trade channels, and we're overbought. Seems like the same pattern again and again and again. But the monthly trade triangle is still down. That's an important one to remember. The monthly trade triangle is not good. That's the long-term trade triangle. So it's not, even with this rally today, it's not turned up. So that's something to really pay attention to, because you can see every time we have gone higher in this market, let me clear that off. Every time we've gone higher in this market, we sort of gip, boom, gip, boom. It seems like it's a pattern. Now the key thing is, obviously, if you look at this, just we're going higher, 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 which could be indication of a trend yet to be developed. But nonetheless, it seems like we're just reaching on the highs here. We're going right up against this really kind of what I consider to be thin air. I think the market's going to have a very hard time holding above that if we don't get more really good news out of Europe and also out of the US. And I don't think it's going to be the case. In fact, Ben Bernanke was saying today, it's not a great recovery. It's somewhat missing in some portions. Some portions are doing well. So it's very mixed, I should say, not missing. It's a very mixed recovery. So we'll see what happens, but I think the market may just go up maybe even more tomorrow a little bit, or then I think we'll see another one of these turn back down. So the question is it going to take this level out, the 1350 level? And that's a big level to look at in my mind. If it goes through there and closes below there, and certainly a close below, let's say the 1365 level, would be an important, perhaps a game changer for the rest of the year. So we'll have to see how that works out. But let's go to our next market. Next market we're looking at is going to be the index, the Dow Jones index, but pretty much the same pattern there. We're up against getting close to the highs. This is sort of over this level here, over the 13,200 level is really a thin air. We've stayed there only briefly and we've come back down. It just seems we keep fighting to try to go higher, and the market just needs good news. And so far it's had some good news. It sort of pounces up, but that big specter of Europe is still there. And also our red triangle on the long-term trend. I cannot get excited about this market until I see this particular triangle go green. So let's go into our next market. That's the NASDAQ, and of course Apple's doing well today, and we've got the NASDAQ also doing well. And that again, same pattern, plus 70, not quite a bull trend yet. So moving along. Crude oil. Crude oil's up a little bit today, but again, the pattern there, 70 plus 70, really not a trend on the upside. Towards the 93.50 level, it's going to have resistance at the top of the Donchian trade channel, and we are overbought. So any kind of negative news that comes out, I think we'll see profit taking and some renewed selling based on these previous highs. So again, the trend is your friend, and the trend longer term based on this is down. Now, if you're an intermediate term trader, this is the key thing. If you're an intermediate term trader, you belong, based on the rules we have for crude oil, you belong from $90.30. So you'd have some profits in there, and I'll show you how you would have got that. Just put the daily and the weekly in, and there's the daily comes in at 90.30, and that was on the 3rd, which was of course Friday. And you can see the weekly rather came in at 87.23. So again, the trend has been up since that point in time. So as for intermediate term and short term traders. So let's go to our next market. Excuse me, the next market is the euro against the US dollar. And again, we're up against this high level, this 124 level. It's a big, big level. But the other level to look at, in my mind, which could be a real psychological level, I'm just going to draw this in for you, going from the highs to the lows. And let me just take some of these triangles off, just not to confuse everybody. And let's go a little bit closer. And we'll just go there, and let's see the 1 month. 1 month, yeah. So here we are at 61.8% retracement, which is right here. And that takes us up to 124.84. That's going to be an important level. Where we are right now is 50%, which I think is also very important, the 124 level. But this 124.80, I would be surprised to see the market go above that level. But I would be more of a seller because our monthly trade triangle is red, long term from 139.69, and the intermediate term trend is up from 123.88. So again, you're sort of in this mixed bag, plus 70. It's neither up nor down, really strong trends. You want to wait, but if you were to sell it against these levels here, all the way up to 24.80, I think you'd be trading with a major trend, which is still down. So that's how I think I would approach this market on the interim. So let's clear the screen, go to our next market. And the next market we're going to be looking at is going to be the gold market. And the gold market there again, it's still a kind of, we're looking for the pullback to the 1,590, 1,580. Got very close. I think the low there, we got to 1,582. So I think that was a fulfilled objective. I think now it's sort of a pullback. But again, if you scope this out, there's not a lot of news and exciting news for the bulls or the bears because this market's sort of just gone sideways. And maybe that's the pattern we're going to see for a while, because certainly the 1630 level and the 1640 level are definite key levels of resistance for this market. You can see we talked about this level before, and it stopped the market, and this is the next level. Now on the downside, you've got the this level here, which I said just 1582 as support. So you're trapped in this sort of big range. You really want to see the market come out on the upside or break on the downside. So I think this 1582 rather, if we go below that, it's going to be a little bit of more pullback, maybe test the 1550, 1560 level right here. But nonetheless, we are in a broad trading range and mixed signals. You've got the weekly, which is right here, that's going up. And you have the long-term monthly, which is going down. So it gives you this sort of trading range. And that's something to really, unless you're very nimble, you just want to be out of that market for the time being. So let's clear the screen, go to our next market. And the next market we're looking at is copper. Copper, it's putting in a little bit of a performance. It's really not super bullish, not super bearish. It's more bearish than bullish, if I can say that, because you've got a monthly and a weekly that's negative. And I think that's the key thing here. Minus 75 is more on the downside. And I think once this little recurring, this little hiccup, dead cat bounce, whatever you want to call it, is over with, I think we'll see the market, come under a little more pressure. And I think you could psychologically just draw the Fibonacci lines in here. Just put that. When you click on here, you'll see a little yellow box that goes, or beige box on the top left-hand corner. Once that's there, you know it's live. So just click on here and drag this down to the lows there. And we'll scope this in really close so we get to see it. Yep, so, yep, it's right on the money. So, 339 is 338.90, so 339.23 is 61.8% retracement. You may wonder why I keep bringing in these Fibonacci retracements. I mention them because they work. I mean, they didn't work, I wouldn't even bother with them, but they're very, very good indicators. And if we get up there maybe another day or two, and we get this overbought condition in the Williams percent R like we have here and here and here, I think it's worth selling this market against the recent highs. So let's see how that plays out. And now let's take a look at silver. Silver is just, what can I say? You did go over the PSAR today. This is the PSAR down here, which indicates that the short-term, intermediate-term trend is up, and that's indicated with our weekly and daily trade triangles. And if you put those in, you'll see boom, boom. You'll see that was a buy signal, much like we had the trade triangles on the PSAR, and that was at 27.88. Currently trading 27.90. It's about where it is right now. But nonetheless, that's for intermediate term traders should be long. Longer term traders should be short silver. I mean, it's just really, that's the way the trade triangles are handling it. If you're conservative, you want to look for, let's say, a more concise trade, wait till all these arrows or all these trade triangles go red or green, and then you're trading with a strong trend. So let's go to the next market. This is the New York Board of Trade, CRB Reuters Index. And again, this kicked in today for short term, but nonetheless, longer term is still negative. Kind of a lot of markets just like this. They're sort of in between. They're not there, they're not there, they're not here. It's just sort of in between. You can see really for a couple of weeks this market's just going sideways. So again, if we scope this out further, get a 6 month, you can see we've had a move up. We're sort of consolidating here. Is it going to continue to go higher? I think it's too early to say. But certainly, I think if we see this market over the 310 level, I think then we've got a strong trend on the upside, which means to me inflation will be coming back in a really big way and a tough way, let me put it that way. So speaking of inflation, let me just go back to my portfolio, because the next markets we're going to look at is soybeans, wheat, and corn. And these markets are definitely a precursor of inflation and so forth. So here we are. We have, this is soybeans, and they've had an incredible run up. We put a great move in some of our portfolios that track soybeans, and you're welcome to let us know. We'll let you know about those. And we're sort of at this level now. Are we topping out? Are we going? It's too early to say. Monthly and the weekly is still positive, so you've got to go with those. Only the daily is negative. If you're a very short-term, intermediate-term trader, you should probably be out of the market right now, waiting to get back in if you get a signal to go long. The pattern we're seeing right now potentially could be starting a triangle, which is like here. And what happens in a triangle, basically it's tighter and tighter, and then it usually is resolved to the upside. But there's been a tremendous amount of news on soybeans, corn, and wheat, and maybe a lot of that price action, the drought, everything else has already been built into these prices. So go with the flow, but the general flow right now on soybeans, the general trend is up. So let's just see how that works out. You've got a weekly and a monthly positive. That's a good sign. The only little negative is a plus 55, meaning we're in a trading range which sort of reflects this shorter term movement. So let's clear the screen, go to our next market. The next market is going to be the wheat or corn. I'm not sure which, but we'll see. It's wheat, and let's take a look at wheat. Wheat, same thing. Now, these are all going to contribute to the cost of inflation. I mean, it's going to cost more to buy a loaf of bread, more to buy a lot of other things that have wheat in it, whether it's wheat filler or whatever it might be. So there's a lot more inflation coming down the line in this market. Corn, you've all heard the drought, all the horror stories over there. We're still over $8 a bushel, which is still an amazing price. But again, if you're a farmer, if you pre-sold your crop and you don't have a crop, it's going to be difficult for you no matter what. So here we are. Look at the PSAR. It's really tight. It comes in today just about 788 789.50. The low today was 789.25, so it just missed it. That shows you how important these numbers are. And if we go below that, then it's probably time to take some profits. But for the time being, if you're a short-term trader, you should be out of this market. If you're a longer-term trader, you should be in the market on the long side, of course. So anyway, this is a big, big thing to look at. The grains, pay close attention to that. Let's pay close attention to the other markets too, because we could be in one of those situations where we could be just a day away or 2 days away from a reversal on the downside. So let's pay close attention to that. And I'm Adam Hewison from Market Club. And if you haven't called us yet on our one-on-one Market Club coaching, give us a call today. It's a free call and a free consultation. So 877-219-1482. Hey, this is Adam Hewison. Have a great trading day. I'll see you tomorrow, same time, same place.